There'll be more on Brexit over the next week and beyond, that's for sure. The pound will move one way or the other, stock markets will follow. Predicting precisely what will happen has become a fruitless exercise, however. Better instead to focus on what we do know. And here we have some interesting corporate announcements and big dividend dates set for the week ahead. Now, breakdown recovery giant AA releases its final results on 3rd of April. Neil Woodford's income focus and equity income funds own a stake in this business. But it's not been a happy few years for investors. The shares have fallen more than 80% since 2015. They have staged a recovery this year, and AA did say in February that annual results will be in line with expectations. But don't expect fireworks following these numbers. Look for underlying operating profit, or EBITDA, of not less than £340 million, in line with guidance of £335 million to £345 million. Now Saga is next up. The specialist in services for the over 50s, it's had its fair share of problems too. It's never really recovered from a damaging profits warning at the end of 2017. Then it blamed growing competition in home and travel insurance and the collapse of Monarch Airlines too. Increasing investment would also eat into the bottom line. But in January we heard that this investment was beginning to pay off. Still, a share price recovery underway since December has begun to unwind, and investors will want to see evidence in the numbers published on Thursday that things really are turning around. But look, it's a big week for dividends next week, with some popular FTSE 100 stocks going ex-dividend on Thursday. Among them is the UK's most widely held stock, Lloyds Banking Group. Now, most of us will own some Lloyds shares, whether it's buying the shares themselves or within funds. And last month it recommended a final dividend for 2018 of 2.14 pence. That takes the total for the year to 3.21p for a 5% dividend yield. Payment date is 21st of May. Now, many analysts still think Lloyds shares are cheap by historical standards, and they are, and that current share prices are too good to miss. However, while it's true Brexit has put a cap on upside for the domestic banks, an economic downturn would also be damaging. Now, consensus appears to be short-term volatile, but an income play to own for the long term. Now, next up, it's superstar income stock Taylor Wimpey. It goes ex a final dividend of 3.8p on Thursday, but investors will have to wait until June for the big one. That's the special payout already announced, worth 10.7 pence a share. Other ex-dividend blue chips next Thursday include packaging firm DS Smith. It's already increased its half-year payout by 14% to 5.2p. The shares currently yield 4.5%. And then there's Pearson, which will start trading without the right to its final dividend of 13 pence a share, up 8% on last year. We round off the week with US non-farm payrolls, data out lunchtime Friday. After last month's tiny 20,000 increase, consensus is for 175,000 extra jobs added in March. Have a good week.